Okay guys, welcome to my new video. I just quickly want to do the last week recap of my trade and how I approach the market based on my SMC knowledge. So these are the trade I had on GDP USD. So and it's on 15 minutes. So this on this day, this 11th, that was last Friday before this last one, the Friday before. So this is how the week close. So what I do is on Monday, let me play the markets to get to Monday. So this Friday, Sunday, Monday here. Okay. So on Monday we have a situation like this in the market. So what I do is I just do what I normally do, map my structure. So as you can see from here, market gave us a push down. Market has been bearish on GU for some times. So what I do is I look at it. Though I have my markup already, but let me just explain what happened here. So market breakdown, we have inducement, POI here, market mitigates POI and breakdown. Then in this small pullback, we had a small pullback here, which serves as our internal liquidity. Some people call it inducement and so on, but I prefer to use inducement. So we mark our inducement, then I identify my POI, which I was expecting the market to come back here, but it didn't. It didn't happen. So market just fills some gaps here and continue the downtrend. So I noticed that market was trying to close below this level to give us break of structure, but all it was doing was external liquidity sweep. So and when market is doing something like this, external liquidity sweep is a sign that market wants to look for pullback. So, but that's not the concern. I just identify my inducement again, which is a bit smaller here, like this too. So I identify it, and next is to identify my POI. Although this high is still valid. Why? Because market has not closed below this level. So until the candle close, that's when we can have a break of structure here. Then probably our high will now be this level. So probably we'll have our high here. So but in this scenario it doesn't happen. So our high still remain this level. So let's see. When I was observing the market and see that okay, market took out this inducement, reacted from this POI, and there was a collapse. That's where we have our proper break of structure. So this level is our recent high, the range that we are ranging for. If market take out this high, close above this high, then we have a change of character. Then this is our low. So immediately market does this, map out inducements, mitigation again, and you see market play around and finally break down. But this is not break of structure. Why? Because market do not close below it. So this is what we have here, like this. Market flash down, push back, then finally flash down again, which is liquidity sweep again. So in this scenario, where is our inducement now? This high, because all these candles place in between this big candle, in between this candle, like this. So we are not using that. So where is our high? We identify that this is our inducement, the last level that the liquidity rests. So we'll be expecting the market to come back there. So this is where I was expecting the market to come and take out. So because this level is like you just grab liquidity. So now the only thing, since I understand that this is my high, this is the range from here to here, and my inducement is here. So if market wants to come down, it will take out inducement, then it will come down. If we want to change character, it will go up. So, but we are following the trend. We are not going to assume that we want to change character and so on. We just want to do exactly what the market is trying to tell us. So, if I'm to enter this trade now, I'll put my entry above this inducement, target this level, then look for my 1 to 3 like this. So this is exactly what I did in the market. So, but if the market do not get to this level, then we reapproach it in different way. So let's see how the market plays out here. This level tends to attract the market because there is a lot of liquidity resting on it. So you see, let's see how the market goes. Let's see how the market goes. So all these are just internal movements. It has nothing to do with us. So you put your stop loss at the top of the range, the structure, in order to not get trapped. So you can see market mitigates my entry straight. So you see, you will wonder that why do markets play around and finally come to this level? Whenever market take out inducements, that's when the market will give you the real moves that I want to do. If no inducements or no POI mitigation, it's not giving you real moves. You will just be doing this ranging thing and so on. So in this case, why I did not mark the POI is all these POI has been mitigated. So it's only the inducements that can attract the market to that level. So all has been mitigated. Some people use this week as a POI because it took out liquidity, but it's not necessary for me to use that because my stop loss has been covered already. So you see, market can still come for this POI, this little POI that you are seeing. So, but that's not what I want to. I've already placed my entry. So let's see how the market plays out. When market took out liquidity, that's where you see the real moves in the market. And it moves heavily, it moves fast. So let's just see how the thing goes. So you see, market is doing its thing. You see, straight to TP. This can be instigated by news or anything, any events, but that's none of my business. I don't really care about news. So I know that news only validates your structure, your technical, if you actually know what you're doing. So this is it. We have break of structure here. So first trade win here. So let me clear this. So as you see, when we have break of structure, what next are we looking out for? This is our last inducement. The market needs, that liquidity is resting on. Market needs to come and take out this inducement. Because market do not create any value pullback here, so we can't use any inducement below here. So let's see how it goes. If the market will come back here, probably we'll have another entry. So it means that we are ranging from here now to this level. From here, now market created another low, which is here. This is not break of structure. Don't get it twisted. Market just create another down structure. It's not break of structure. So in this scenario, this is our high that we are ranging from, and this is our low that the market has created. So if markets take out this high, change of character, if market take out this low with inducement taken out, then we have break of structure. So in this scenario, market has created another inducement below. So what we are doing is to shift our inducement to the last one that the market created. So what we are looking for is for the market to take out this low, high, this inducement first. Sorry, hold on. For the market to take out this inducement first, Then probably if the market will get to this level, yes, after taking out this inducement, this, let's look for our POI. Inducement POI, yes, this can be our fourth POI. Then this will be our extreme POI, which has been mitigated. So this is the POI we are using. So this level now, if market comes there, you can have a sell. So in this scenario, since we are close to the high, so and the pips is not gonna, I can just put my entry here, probably target, allow the market to do its thing, maybe here at the top of this range, then target 1 to 3 again. So this is my target. So let's see how this is gonna play out. So today is this is the trade that we are looking at. So let's see how the market goes. Correct. So now you see market sweep this inducement but refuse to close below. So the structure still remain intact. So the only thing that will change is we adjust, we bring out our inducement to the new inducement, which is here, that the market just created. Why is new is no break of structure. Assuming that this market closed below here, we have a break of structure. But since it doesn't, then inducement shifted to this level. This high is not our recent high. So we wait for the market to create a proper structure for us to follow it. And as you can see, market start pushing up. So in this case, this decisional POI will be shifted to this POI. I will explain how I map my POI later probably in my next video. How I identify my POI and so on. Why I choose those levels. Okay, no, this one is not valid because it has been mitigated. So this is not valid. No, this is not even our inducement. Our inducement is here. Why? Because this pushback, this pullback do not come below this level. So we only have something like this. We have something like this. So if you look at this structure now, this is our last close. This is our last pullback. And this market, assuming that this happened, then we can use this. But since it doesn't, we leave it this way. So let's see if the market will get here and probably give us an entry. So this is the trade I was expecting to enter on last week Friday. So I just set my limit order, and today, which is Monday, the limit has been triggered. So I'm just watching and see what the market is trying to do. So you can see immediately we have a mitigation here. Market reacted, and you see market start pushing down. So as at the time I'm recording this video, this is the situation of the market. So if the market closed below here, we have breakout structure. So this is the situation of the trade now. So I'm partially in profit. So this is how it is now. So if the market give me 1 to 3, that's gonna be a good trade. But when the market gets to this level, I'm moving my stop loss to break even straight. I'm probably taking some percentage out. But depending on how the market is reacting around here. So because sometimes I just prefer to allow the market to do its things. So that's it for today. That's what happened last week. This is just the trade I had last week. Only one trade, and this one last week / this week. So it's still running. So I'm up 3% last week, which is fine. So I'm waiting for this to play out and see how this week will start. So thank you. See you in another video.